Hello and welcome to the Real Estate Experience, where we talk about all things Abu Dhabi real estate. I'm Ben Crompton and I'm here with Hugo from our sales team. Hello, Hugo.
Great to be here. Thanks for having me.
Great. And today we're talking about real estate as an investment, as an asset class, and where it should fit into your portfolio. So just to start off, Hugo, what do you think about real estate as an investment? Obviously, we have two types of buyers, end users and investors. What do you think about real estate as an investment?
I mean, it's the classic investment, isn't it? It's in terms of, we mentioned there, the buyers and the investors. I guess for homeowners, it makes sense to a lot of people, because if you're planning to stay somewhere for a long time, instead of paying your rent, then pay off your mortgage and put that equity back into your own pocket.
So you say, as an end user, you're also an investor, basically.
Yeah, absolutely. Yeah, well, it's a lot of people who see nowadays are maybe they're hedging their retirement on maybe their property that they're owning, and they don't always traditionally have other investments. So real estate has been a strong investment for a lot of people for gaining net worth, but also for securing income in the future.
It's got to be the oldest investment out there.
Absolutely.
Pretty much, right? Ancient lords and kings, renting out land. Yeah, it's the oldest and most traditional.
Mm-hmm. And it's also for some people as well, if they do invest or they get a mortgage, or it forces their savings as well. So for me, I quite like it in the sense of, unless someone is very, very good at investing and knowing where to put their money, it is a natural way for them to do it. What do you think of real estate as an investment?
Yeah, it's kind of like, almost my specialist subject. I love the numbers and I love real estate as an investment, and I love, what it can offer. Now, I would never suggest that people invest only in real estate, in the same way you should never invest, like, let's say, only in gold or something like that, because, real estate goes through cycles the same way everything does. And actually, you and I had an interesting conversation the other day. If you're in real estate like we are, you're particularly susceptible, because let's say there's a downturn in real estate, our salary drops, the income from our real estate drops, the value of our real estate drops. So almost, we have to be very careful. And this is, one of the reasons why we're doing this video, to diversify what we invest in. Because, if you're in real estate and you just buy real estate, like if you were a gold miner and you just bought gold, as soon as that market crashes, you're doubly susceptible.
Well, I've been in stocks before, and they do go up and down, just like real estate goes up and down. But so you're saying don't go into one asset. So how would real estate compare to those assets? For instance, stocks, and how would you mix the two?
So real estate's great in that you can get capital appreciation, you can get income, and it never goes to zero. So the issue that you have, with stocks is you get capital appreciation, and people love, I've got stocks, and you log on every day and see how much has gone up and down and that kind of thing. You can get dividends, but they're pretty small, and you also run the risk of, it going to zero. Now, when you look at bonds are generally much safer, but your return will be lower, and again, it can go to zero. If you compare with gold never goes to zero, but you get no income from gold, you get capital appreciation. So real estate, for me is, it's got that trifecta. It's a bit of an American thing to say, but you get decent income, you get capital appreciation, and it never goes to zero. So it's a safer investment, generally speaking.
Yeah, one thing I've seen with real estate is some people will compare the real estate capital appreciation compared to, say, stocks, and for instance, whether or not that actually keeps up. But then you mentioned the additional income that you get from real estate as well. So you can get that dividend and capital appreciation without running the risk of, say, a company folding, which you have no control. People always need real estate, right?
They do, yeah. And without, a war or something like that, real estate will always come back up to where it was, even if you buy at the top of the market. My brother's a great example here. He bought his house in late 2014, timed it absolutely perfectly. It was sitting in negative equity for, 6 or 7 years. But now, it's blown through that, and it's worth, 50% more than what he paid for it.
Those years have taken a toll on him, have they?
A lot of grey hair. A lot of grey hair.
Should have bought an owl reef. That's what I should have. Yeah, I mean, COVID was a good example of that, right? COVID obviously changed the way the world was working at the time. Bit of a drop, but since then we've gone up and beyond above that.
Yeah, no one would have thought that COVID could be the catalyst for increased property prices. Obviously, there was a drop there, and in the world, I think it's kind of carried on the same. But in the UAE, for whatever reason, COVID, it sparked that increase in property prices.
So some people, if they in real estate, they will follow the trends, often with stocks as well. So if they see the prices going up, they want to get in on the market. If they see the prices go down, they want to exit.
Yep.
What would you be advised to people if they wanted to buy real estate? Maybe how to not over leverage themselves, but also to how would they deal with those times? What would you say to them?
So my approach to any investment, and part of this is I'm not technically very proficient at like trading stocks or something like that, is to Warren Buffett it, is to get in and stay in, and get in to make sure that you can stay in and ride it for the long term, because you'll lose money when you panic sell. You'll lose money when it's the market's dropping and you want to get out, and you get left behind, because there's when you talk about shares, there's smarter people out there who get out quicker. So whatever you invest in, unless it's Bitcoin, whatever you invest in, stay in it, ride it through these, as long as you're reasonably sensible in what you pick, these asset classes, they'll go through blips and phases, but they'll come out the other side, particularly for real estate. And if you're renting it out, make sure, because pretty much you've got to put in either 20 or 40% equity. So you have quite a bit of gap. If you're renting it out, you can afford quite a big rent drop before the rent starts to become more than your mortgage. So just understand that. Make sure, okay, so I can rent it out for this. My mortgage is this. At what point, do you need to start paying money into that mortgage? And so then you can see, okay, now, how affordable is this? What kind of drop can I afford in the market to, still stay in it? So that's important to know.
I believe that's something which I've seen your brother mention as well, Barnaby. He mentioned what was the lowest price that the rent has been in the past.
Yeah.
Will that cover the mortgage? And then likely it's going to stay probably above that over, which I thought that was quite a good piece of advice.
Yeah,
to check that data and just to make sure, am I aware of where that actually will stand in the market?
Yeah, and we would expect now to that low to be a bit higher just because the market's gone through. But certainly, check out, what's the cheapest that's ever been, and can you afford it if it dropped to that?
Yeah, there was an excellent article by Warren Buffett I believe it was shared in Crompton's actually for his annual general meeting.
He owns a farm somewhere.
He owns a farm and I believe a mall opposite New York University, right? He didn't even think about looking at it. This was in the 70s, and he never looked back at the prices. He just wanted the fundamentals, and the fundamentals are in place for him. And I try and actually use these examples for people who are looking to buy. Do you think that the fundamentals are in place, that this is going to be something which is going to long term through the dips and rises be a good investment?
Yeah, and something that unfortunately we're all human. Most investors will look at capital appreciation and that's it, and they'll be like, okay, is this going to go up in value? Whereas what someone like Warren Buffett, and I try and look at this as well, is what's my ROI? Is my ROI decent? And then is it? And then your capital appreciation is just on top of that. Mm-hmm. So if you're buying for capital appreciation, I think that's the wrong move, because you can't predict that kind of through. But if you've got a good ROI, that's a solid investment. That's something I would pick over capital appreciation every time.
And the ROI is quite good in the UAE for real estate, right? Especially compared to other places like the UK, maybe the US. But how does that compare to other investments in real estate?
Yeah, it is. It's gotten worse recently because of Disney, basically. So our ROI in Abu Dhabi has been, had called yield compressions. The ROI has gone down a little bit. But yeah, generally speaking, ROI is pretty high in the UAE. ROI is a really interesting barometer because it varies obviously across locations, across unit mixes, and it actually is very similar to corporate bonds. So if you've got a high ROI, someone will come to me and say, like, I want 10% ROI. if you have a 10% ROI a coupon on a bond, that means that bond is super risky. All right. So if you have high ROI on property, very high, that means that property is very risky. It's difficult to rent out. It's far away. It's, small, whereas a low ROI means it's not very risky. London's got 2% or something because people know that, the market there very rarely goes down. The laws are very stable. It's a very stable investment, and people are buying there basically for capital appreciation. So getting high ROI is nice, but you just got to have half an eye on, okay, like how risky is that asset?
So with the ROI going down in Abu Dhabi, that would be a good sign of a maturing market.
It would, yeah, it would, and it's a sign of confidence in the market and confidence in the future of the market, basically, because people are baking in, their price rises now. They've said, okay, Disney, my property is now worth 5% more than it was yesterday because I believe in the future of Abu Dhabi, and therefore, because my property has now gone up in value, rents haven't followed that because renters don't care about Disney, so that means yields have gone down.
Yeah, and it makes sense, right? I mean, things that have been touched on in previous podcasts, including one we did a few weeks back, talking about the safety, the sovereign wealth fund, the diversification of Abu Dhabi. It's obviously in a very strong position with not some of the issues that other countries might have in interest repayment rates, for instance. So it's got a good stable future. And
yeah, and the longer it is stable and the more it goes through these cycles, and corrects and the government makes these corrections and improves its tax base through VAT and corporation tax and things like that, the more people have confidence in its ability to deal with these things. And the more confidence people have, the more they expect property to appreciate in the future, which means, the more property goes up now.
You mentioned crypto earlier. What do you think of crypto?
Yeah, I don't like crypto. I mean,
have you ever bought
for
it?
me, no, never. For me, the problem with crypto, do you remember NFTs back in the day? So you could get like an NFT of like a pixelated punk rock guy, and it would sell for like $100,000 or something. They're worth nothing now.
I think some celebrities bought them for like 8 million, didn't they? Like some of these NFTs.
Yeah, something like that. So for me, crypto's like that, and I've heard it described as a liquidity valve. So when people get too wealthy, which we haven't had a global recession in 16 17 years, so we had this blip over COVID, but governments jumped in hard to make sure that it was only a blip. When people get too wealthy, and the US is a great example, 4% growth year on year, China as well, like 5%, they start to invest in these other strange things, and for me, crypto is one of those. Crypto has no use, zero. Okay, it has absolutely no use. The blockchain has some uses, but crypto, people only use it, to for money laundering and to avoid foreign exchange rules, as far as the evidence that I've seen. So it doesn't have any use. You can't really buy anything with it. It's not like gold. You can't turn it into jewelry or something like that. So I think the next big recession, crypto goes to zero. And it's like a speculative asset.
So it went down during COVID, but it has since come back up quite a lot.
It went down to 20,000. Well, we're talking about Bitcoin now, and I know it's over 110 now. Yeah. And
it's haven't Aldar and other developers actually started to accept it as a payment method?
Yes, yeah, they have, and I think just recently RAK said that they would accept it as well.
So would that not give it more legitimacy if it is starting to be used by big developers in the UAE, for example?
Well, so although those developers will say we accept crypto, it's very rarely crypto. It's US dollars from the sale of crypto. So they'll partner with a firm, and you won't pay Aldar your crypto. You'll pay this firm. They'll convert it into dirhams, and then they'll pay Aldar. Right. Very rarely will those companies actually take crypto and keep it, and if they do start to take crypto and keep it, then that's something else. But most of the time, even if they took crypto, they'd sell it straight away because they can't use it to buy anything else. They can't, if Aldar wants to buy cement, no cement company is going to take crypto. So, they want dirhams, so they'll sell it there and then. And they don't want the volatility, because it's very volatile, of holding it on their books. So although they will use it, it's not in the way that we imagine.
Yeah, it's interesting. A lot of people that I come across on day to day do actually invest in crypto and do have a lot of crypto, or have done very well with crypto. So it's definitely a topic which is
No, I mean, it's yeah, I say it's controversial, but listen, if people keep buying crypto will keep going up and look like a great investment. But I just don't think there's any future in it, and I would never buy any myself, just because, you have to. If you're buying something, there has to be value in it. Right now, the value is I can sell it for more than I paid for it, which is great until people need that money back. And when the next recession comes, people will start to need money that they don't need now because they're doing quite well. And then they'll start to sell that. And then we will start to see, actually there's no intrinsic value in crypto and you can't do anything with it. It's just a thing. Could be anything.
And this goes back, I guess, to real estate, in that there is intrinsic value in real estate. People need to live in homes, and they do provide rental income. Whereas, as you say, it's 100% capital appreciation for Bitcoin, right? So if you were going to buy property now in the UAE, Abu Dhabi, where would you look? How would you build a property portfolio?
So as we spoke about before, so I'm big into ROI. I have bought off plan, but never on a launch. I've bought secondary market off plan, and it's annoying. Sustainable City.
Okay.
Yeah. But it's annoying because I don't. It just seems to take forever to hand over, and I'm not getting any income out of it. I'm getting theoretical capital appreciation, which is fine, but as from my personality, I don't really like that. I mean, I would do it again if I saw the right opportunity, but I prefer somewhere where you can get good ROI, good tenants. Like, I tend to look at 2 beds, 1 beds, you probably get high turnover of tenants. Studios, never. You get bad quality tenants, there's high turnover. So I try and look at 2 beds where you can get maybe like young professionals or older professionals or something like that. They're not going to be in there a long time because they get kids, but you can generally still get pretty good return. 3 beds, your return's a bit lower because it's more stable. And I would definitely look, still in, these popular areas, Raha Beach, Yas, Saadiyat in some areas. I've done a video before where I think Saadiyat Beach Residence is undervalued. I think that got great opportunity, but too much, the ROI is too low now for me to really look at it. And in the better quality buildings in Reem Island, I would say, generally speaking. And apartments, better ROI than villas, although townhouses are good. Reef has pretty good ROI. And is undervalued at the moment. I think that'll be the next thing to go up in value. And they're all townhouses, low service charges, very nice. So yeah, spread out your portfolio, but I'm ROI first, capital appreciation second.
Okay. Well, I think I've learned a few things there.
Good to hear.
So I don't think I've got too much more to add on to that, but.
Great. Well, one thing we haven't spoken about, which is the kind of like the hidden secret source from property. Although we've said, okay, property's got this trifecta of decent income, capital appreciation, and it never goes to zero. You also have leverage. So leverage is the secret that no bank will lend you any money to buy anything apart from a house and a car, right? As an individual. So your car depreciates as soon as you drive it off the lot. You've got zero chance of selling that for any more than you bought it. But a property, can appreciate. And so right now we're able to borrow from the bank at 4%. If you're borrowing from the bank at 4% and you're buying an asset that's yielding you 7%, every dirham you borrow from the bank, you're making 3% on. All right? It's not even your money. You're not even using your cash, right? Every dirham you buy from the bank, you make 3% on. So that, in terms of income leverage, is absolutely massive and changes a 7% yield into a 10 to 12% yield, depending on what you're looking at. So leverage on income is massive, and also leverage on capital appreciation. If you buy a property for 1 million dirhams and you put down 200,000, it goes up 20%, so it's worth 1.2. You sell it, you get your 200,000 back. You get 200,000 profit that you made. You pay the bank their 800. You've made 400,000 on 200,000 investment. You've doubled your money, but your property's only gone up 20%. So leverage is massive in terms of creating wealth, and it's the secret way of generating wealth that most people kind of don't really understand and just sort of accept. But if you can get a bank to lend you money on property, which I always think you should, then that leverage makes you outsized returns. And even though maybe property underperforms something like the S&P 500, with leverage it massively outperforms it. So that's another reason why real estate is such a powerful investment.
It's actually a topic which I was speaking to someone about last night. Actually, they were having a look at off-plan options, specifically Yas Golf Collection.
Yeah,
because they were wondering about as an investment opportunity, and I was showing them some of the prices, the sale prices, and they were asking, "Oh, it's not actually increased that much." But I had to remind them that the owner hadn't actually put in the full amount; they'd only put in 40%. So actually, they were making 100% on their investment for each of the properties they owned over 3-4 years. So that's much better than the historical S&P 500s.
Yeah, it's true, and actually, off-plan is one way is a place where people are starting to understand this principle, because they've only put in a certain amount of cash and they haven't had to go to the bank. Because most people think like, if I buy something for $1 million, like I've put in $1 million, and they forget about the fact that actually the bank, lent them the other 800,000. But when you're buying off plan, it's actually, okay, so I have only maybe put in 200,000. And if I sell it for 1.2, actually, I've invested 200, I got 400, it's fantastic. And people can, actually see that, in full effect from off plan. And so that's why a lot of people like to flip off plan and maybe buy to flip. So, generally wouldn't recommend not buying to flip. But if you want to flip, it's absolutely fine. But yeah, people are starting to understand this principle.
Is there a point where, so for instance, it's 20% for the first house for a down payment, 40% for a second house? At what point would that be? Is there sort of a percentage of your income which you should look to go up to in investments? If, for instance, you're getting your mortgage repayments, some to your rent are coming to say 50% of your take-home pay. Is there a sort of guide there, but maybe someone could go off, or should they get houses until they're basically 90% of their take-home pay?
No, so and again, it's a bit different for you and I because we're in property, but certainly you don't want a full property portfolio. You should be in shares, and you should be bonds is a tough one, but shares and property are good, but they tend to be cyclical. So the reason why people invest in gold is it's the only counter-cyclical that people really know about or understand, including me. So counter-cyclical means that, let's say we're going to a recession, the S&P 500 and your property will both go down together. So it's kind of a pain. But gold will appreciate because people see it as, a non-risky asset, a store of value. So, I would generally, if you can invest something in a counter-cyclical like gold, then you should, because otherwise, if you struggle with your income, which if you're in real estate, we're going to need, to find some cash from somewhere, and selling your stock or your real estate during that time is a problem. And so I would also say invest in cash, and there's some fantastic deals at the moment, not paid by them, but, I think it's Mashrek offering 6.2% on cash up to 500,000. As of whatever date this is now.
Is that a savings account?
It's fantastic.
Just to put in a savings account, is it?
Yeah, so it needs to be a salary transfer account, but
okay.
But yeah, and I think even if it's non-salary transfer, it's still 5%, which for cash is unbelievable.
Yeah, I think WEO do 6% as well. I was speaking to someone yesterday about that. So
great deals out there.
Yeah,
do your
absolutely.
Research.
Final question with the market, which has gone up a little bit now.
Yeah,
and with the prices who are now at all-time highs in some places and so on, if people are hesitant about buying under those conditions, I'll say my opinion real quickly, and you can correct me or add to that. But I see the market over a longer period tends to trend upwards generally anyway, due to inflation, due to demand, and so on. But what would you say to people if they're hesitant at buying now? Would you say Warren Buffett style, just don't think about the short terms, think about the long term? How would you go about that?
So yeah, that's a great point. So two things. Yes, for Warren Buffett, if you think it's a good asset to buy, then buy it and hold it. But two, what's your alternative? So your alternative is you're gonna hold on and wait for a crash. And where do you see that crash coming? And unless people know more than me, I don't see a crash coming in Abu Dhabi. I don't see one on the horizon. Right, in terms of supply and demand, Dubai looks like they're slowing down a bit from oversupply. Ours is nowhere near, and our population increase is going great. And things like, and the reason why property has gone up so much, things like, the Disney investment, Etihad Rail and stuff like that shows that, the government is investing, not just the government, but, big companies in the US are investing in Abu Dhabi. They see a very positive outlook for the future. So, you either invest now, in an asset that you like and trust that, that positive outlook, or, you keep renting, you invest in something else and you wait for the next crash. But who knows when that'll be. And even if it does crash, is it going to come down to the level that we're at now? Will it not crash that far? So, generally speaking, you should, if you have the money, particularly if you're buying somewhere to live, you should definitely buy. If you're buying an investment asset, then how does that look in your investment portfolio? And hopefully today's given you some idea of how it might look. But definitely to live, 100%. And then as an investment, it's completely up to what you're looking for.
I think I heard a saying that's quite common, that these skeptics predicted 12 of the last 2 crashes or something like that. It's There's always skeptics on there. It's fundamentals and long term.
We are, and again, you and I are completely biased, but because we want people to buy real estate, so people need to take that into account. But you don't know when the next crash is coming. It's impossible to predict unless you see some market weakness that we don't see or no one else sees coming. If you see that, great, up to you. But if you don't see it, then you have to invest on the basis that things will carry on as they are, and so just makes sense to buy property, or or buy somewhere that hasn't appreciated. Saadiyat Beach Residences, Al Reef, maybe Reef 2, those areas still, haven't really moved much off their 2000 and where was probably the low 2000 and year 2000 lows.
Yeah, and a lot of the properties which have come from post-COVID, and actually are only really now just going above the pre-COVID levels, right? So. And Riemann still hasn't gone past that. Raha Beach, I'd say, is just coming up to that level now. Obviously Yasan and Saadiyat, they've been appreciating for a long time, so they've been going great. That's great to know.
Anyway, Hugo, thank you. That was very interesting. Thanks for all those great questions. I appreciate it.
It's a good conversation.
Yeah, and thanks for coming in.
Thanks very much.
All right, we have been the Real Estate Experience. Thank you very much, and we'll see you next time.